Good morning, everyone. It's another beautiful, chilly spring day here in the Midwest. This is the pre-market morning report for Monday, May 11th, 2026. My name is Joseph Lackland. Thank you for joining me. Let's check in with the news headlines that have been permeating the news feed this morning. Give us an idea of what type of narrative is being projected for today's trading session. It looks like the tensions have gotten back to high and very nervous. We had last week a report of peace negotiations and talk and rhetoric that things were going to get better. That this is several times now that this pattern has repeated where the war is getting better. Trump says we're close to a deal, and then more escalation seems to surface, more conflict seems to come out of the region. More missiles are flying, more drones are striking. This is just how things are these days, where we're told one thing, but the evidence points to exactly the opposite. So very wide gap between U.S. and Iranian positions as Tehran blasts unreasonable White House demands. Summary. Iranian foreign minister, everything we proposed in the text was reasonable and generous. However, U.S. officials insist on their unreasonable demands. Well, the United States is demanding a full and unconditional surrender of Iran and the give up of enriched uranium and the relinquishing of the control of the Strait of Hormuz so everything can get back to normal. And then when they don't do that, when they don't comply with our ultimatums, we simply say that they're unreasonable and they don't want to negotiate, and we're going to do whatever it is that we're going to do in response. So I don't think that that really provides them with a lot of incentive to negotiate with us, because that's not really a negotiation. That's basically a list of ultimatums that must be adhered to, or else. Saudi Arabia condemns Iran for its latest drone attacks targeting UAE, Qatar, and Kuwait on Sunday. More drone strikes, more missiles, more escalation. Qatari LNG tanker abruptly U-turns in Hormuz checkpoint after earlier in weekend an initial one made it through. An unprecedented first for a Qatari tanker of the war. So basically nothing has been going through there without paying a toll or without Iran say so. Iran continues to control the Strait of Hormuz. It effectively remains closed. The deficit is 13 million barrels a day of crude oil that is not making it to the world's global supply. The world continues to consume crude oil at the normal rate. I'm going to refer back to Claude's study here that I have been using for the last 3 days. This has not changed. The weekly deficit is 91 million barrels. It's 13 million barrels a day. There's 7 days in a week. That's 91 million barrels. The cumulative deficit by September 5th, that's if the war stops on September 5th, would be 2.73 billion barrels at 27 weeks of closure. The deficit at the end of December, which is a lag period, because once the strait reopens, the production does not come back online right away. It takes months for production and distribution to normalize back to where it was before the fighting started, because lots of facilities have been damaged. Some wells have been shut in. They need to be restarted. This process does not happen instantaneously. The deficit would be 3.1 billion barrels. That is on a lag effect. You can see the decay right here. This is the damage that's being caused right now. This is the damage that's assumed over the next couple of months if the strait remains closed. This is the decay envelope of what the deficit continues to build on after everything supposedly goes back to normal and all is well. This is 6.8 times larger than the 1973 oil embargo crisis right now, and this is going to have catastrophic effects on the global economy. It's already manifesting itself in forms of European jet fuel shortages. I think Europe has about 5 to 6 weeks left of jet fuel. We have about 400 million barrels in the Strategic Petroleum Reserve. We are the top exporter of oil at the moment during the crisis, and we are simply drawing off of our storages. We are not producing a whole lot more oil. Production in the US is slightly down, I believe. I'm going to check that later, but we are definitely not ramping up production. And the reason that we are not ramping up production here is because the market is not able to send the proper signal to the oil industry that it would usually send during a massive crisis. So the crude oil price being at $97 a barrel is not really giving the market enough incentive to invest in production and invest in infrastructure to increase that production. So the forward signaling mechanism of the futures market is not functioning correctly at the moment. It's sort of functioning, but not really. And we'll get into that later. Gasoline is still at a multi-year high. It has come off a little bit. It is on a gap higher, just like crude. So over the weekend, the escalation of tension pretty much caused this gap opening higher here. It's not a big gap, but it is a gap nonetheless. We gapped from 94.50 up to $98, so about a 400 tick gap. We did trade up to 100. And sure enough, as soon as we traded up to 100, the price was determined too high and the price was set, shall we say, lower. So it went back down to the lows, made a new low on the session, and has now started to chop and drift. And now, of course, we come into trade for the US session, and the crude oil is being marked lower here. So crude oil is going down at the moment. We can see that the gasoline is doing the same thing. The gasoline had a gap open overnight from 354 some odd area to 357. Nothing major. A modest gap considering the level of the crisis. We did trade higher up to 363, and now, of course, we are coming off uh, pretty good here. Maybe we'll close the gap in the next couple of minutes. This is the previous day's high, so I would expect some buying support here at the previous day's high. But I'm sure that a few news headlines will be enough to put some pressure on the energy market, to the effect of we have a deal, things are going better, maybe there's some news that we haven't thought of yet. And maybe what's really happening here is that there is something going on underneath the surface that we're just not aware of, and it will reveal itself soon in the future, and that will be a reasonable justification for why the crude oil is not continuing to move up despite the Strait of Hormuz remaining closed, and the gasoline problem that is manifesting itself here in America right now, where the average price of gasoline continues to move up week by week to the tune of about 20, 30, 40 cents a week. So at this rate, the gasoline prices are going to be much higher. The market continues to press the all-time high. NASDAQ is still on the all-time high. So even though we had news that the war was getting worse and crude oil gap higher, the market has not gone anywhere. The market is still in the full grip of AI mania. It believes that, the AI growth is still intact, that the technology and the data centers are going to provide more boost for the indexes going forward, that there's still lots of productivity and value that has not been priced in yet. The S&P is a similar story at 7,400. And this is just more of the same type of behavior that we've seen now in here for weeks, where the energy crisis remains, nothing has really changed, and the crude oil is still hovering around $100, and the market continues to press the all-time high. Let's look at a couple more articles. And I found this article very interesting. It says trading the blockade. You can find it on Zero Hedge. I'm not going to read the whole article in its entirety, but it basically sums up what I just said. Well, with Iran came back over the weekend with another proposal. President Trump's response was not ambiguous. He called it totally unacceptable in a typical fashion. As Reuters reported, Iran's response called for an end to the war, the lifting of U.S. sanctions, and a resumption of Iranian oil trade. Well, Iran wants to get back to business. I'm sure the rest of the world wants to get back to business as well. President Xi is supposed to meet with Trump in China in a few days. So he's probably going to have something to say about this as well, because 70% of his country's oil comes from that region. So I'm sure that they want the war to end as well. Trump's rejection sent oil higher again as traders marked down the odds of a quick resolution. So we begin another week with one of the world's economy's most important waterways effectively blockaded from both sides, Iran trying to use the strait as leverage and the U.S. using its own blockade as leverage to force a better deal. Bottlenecks everywhere. Our approach this week is a continuation of the one we've been using for the last several weeks, trading the bottlenecks. So they're looking for names that are influential and will be affected in the drama that's been playing out here. And if we go down to the end here, this is the most interesting part of the article. The trades that they have, they're doing mostly derivatives, so they're doing short-term plays on options that will move, right? And how they're selecting these is we have three more trades tied up. We have three more trades teed up later for today. One is tied to a real economy logistics theme. One is tied to photonics and optical infrastructure. One is tied to energy storage and battery technology, where the opportunity set is expanding beyond EVs into grid storage, AI data centers, drones, aerospace defense, and other high power applications. So AI and war seems to be the hot trade lately. The main takeaway was simple. The best trades didn't require us to predict every geopolitical headline or every AI stack rotation perfectly. They required us to be in the right themes with defined risk structures, then take the money when the exits were there. We've appended all of last week's exits at the bottom of this post, full transparency, as always. Before that, they said something which I've been touching on and I've been identifying for weeks now. That's especially useful in this market because the same headlines that create the opportunities can also create the reversals. A Strait of Hormuz headline can move oil and shipping overnight. An AI infrastructure headline can reprice semis, power names, and photonic names in a single session. A SpaceX IPO story can drag the public space names higher before most investors have built any exposure at all. And this right here is what I think is the most incredible feature of this market, is that it is a news headline that causes the price to move. It is not the actual physical reality of the news headline or some fundamental feature of what the news headline is describing. It is simply the news headline itself and the notion that things are going to do whatever it is that they're going to do that causes these massive moves here. So maybe it was a news headline that moved the gold and started the gold rally here about an hour ago, right? It wasn't the fact that there's a shortage of gold or that the American dollar is continuing to lose purchasing power. It's the notion that, gold is going to do something in the future. This NASDAQ is obviously completely under the impression that we're just going to go up forever and that AI is a limitless growth revolution. It may actually not be that. There are some problems with OpenAI, and there are some other problems with, how this stuff actually works. I'm using this stuff every single day, and I can tell you that it is really powerful and it can do a lot of things, but I have to make sure that it doesn't hallucinate or do things incorrectly. I have to audit every project that I give it. I have to give it rules. I have to tweak the code myself if I have it write some code for me. It definitely is not set and forget. It'll just do whatever you want. So, you know what? I found something that I think explains everything. I just found it. Here it is. So, actually, there's not going to be a crisis. AI is going to really help. I Here it is. Breaking news, Powell says we can print more oil. Infinite liquidity, it says. Infinite oil problem solved. In a bold new monetary policy statement, Chairman Powell confirmed the Federal Reserve is now authorized to print as much oil as the economy requires. See? Problem solved. We have the technology, we have the balance sheet, we can print more oil. Markets love it. That's why the market's on an all-time high. Wall Street reacts. This changes everything. Consumers thrilled, gas prices to zero. Okay, we could do that. Coming next, Powell, we can print more food in houses too. So those downstream effects that I talked about that are going to come from the energy crisis, there's no reason to worry about those. Those are going to be solved as well. You can see that the printing press here has now been recalibrated for oil. Energy independence achieved forever. Economists applaud the historic move as a game changer for global markets. Critics warn of possible side effects, including exploding storage needs and the end of reality itself. Not really a very deterring set of consequences here. So just never mind everything I said. We're going to print more oil. What is going to happen in here today? It is really anybody's guess. My guess is that the market's going to continue to press the all-time high, and this is while the news is getting worse. So we actually go up on good news, which is scenario A, that everything is fine and we're negotiating a peace deal, and the crude oil goes down. And in scenario B, the crude oil goes up because reality is that the Strait of Hormuz remains closed and that there is no negotiation for a peace deal that's really of any substantial value. And the market doesn't really go down. So in scenario A, the crude oil goes down, the market goes up. And in scenario B, the crude oil goes up and the market stays steady and then the market goes up. So in either case, the market's going up. So my guess is that the market's going to keep going up. The situation in the Strait of Hormuz is going to keep getting worse. And the oil is going to go steady to higher with several raids, shall we say, that occur of the price when these news headlines hits that the situation may be getting better and that we're close to a peace deal. So, with that said, good luck out there. It's going to be another very interesting week. Make some extra popcorn. I'm going to make some extra coffee over here because I'm probably going to be glued to my screen watching the price action and watching every news headline as it comes out. I'm definitely not going to try and trade the news headlines. That's what programs are for. Hopefully I will have some good script demonstration videos for you guys later. Until the next one, thank you for joining me. Take care.